our panel to discuss the bank earnings. We'll begin really hearing from the banks on Friday: Wells Fargo, BlackRock, Morgan Stanley, just to name a few, JPMorgan as well. And so Kenneth Leon, Global Director, Industry and Equity Research at CFRA, and Bob Lang, President, Chief Options Strategist at Explosive Options. Thank you both for being with us. I'll start with you, Ken Leon. I saw you have a lot of buys. I saw a strong buy on Goldman Sachs. You like this group, is that right?
We do like the group. JPMorgan really kicks it off Friday morning. Jamie Dimon's letter speaks to the uncertainty we have today. But generally, banks this time are not the problem. We certainly see strong balance sheets. There is concern with the economy, with the consumer, as it relates to credit risk. So investors and bank analysts are very much going to be looking at if the banks increase their loan loss reserves. Additionally, which we can talk further, is the capital markets, which were expected to begin to percolate, be stronger in the second half of this year for equity capital markets and M&A.
Okay, and yeah, that'll be interesting because right now I'm not sure we're seeing that. Bob, some of your thoughts?
Well, good to see you, Nicole. So one of the problems that I see with these bank stocks right now is where they're sitting below the 200-day moving average. And there's an old saying that goes, nothing good happens below the 200-day moving average. And that's certainly been the case for all these stocks: JPMorgan, Morgan Stanley, Citigroup, Wells Fargo, and Goldman Sachs. So I see perhaps that these stocks have gone down a little bit too far and are due for a bit of a relief rally. But maybe just back up to that 200-day moving average would probably take them to about 15-20% from here. And, you know, I think there's a lot of people who are going to get excited and enthusiastic by that move, but it really is simply just a bear market move up to resistance. So while I do think these earnings numbers are going to be pretty good, however, I do think that there's going to be a little bit of hesitancy from the audience and from these CEOs saying, look, you know what, we really don't know what's going to happen with tariffs and where the markets are going to go after some more of these are implemented. And it's really, truly a world of uncertainty right now.
Yeah, because and so you're echoing what you said at the end of March. I think you were saying that you had seen some relative strength in these banks, but now the concern is the guidance. And is that what you're watching as well, Ken? I mean, how are you comfortable with your buys and strong buys when maybe they may come out and say, we've added to our loan loss reserves, we're not really seeing loan demand, we're seeing the capital markets not really, it's not going to be so great, maybe we won't have the M&A IPO activity that we had hoped? I mean, they could say that.
Well, sure. So the bank managements, like analysts, are going to be conservative. They're going to talk about the balance sheets and their capital being ample for anything that comes their way. But to the point before, these are cyclical stocks. They do drive based on volumes. So even with rates coming down, perhaps 2 Fed cuts later this year, you do need to see positive loan volume activity. You do need to see the capital markets open up, which generates significant non-interest income earnings for the banks. And the other conditions will be whether they're right sized in terms of cost controls or maybe have to do some workforce reductions. So I think the best case scenario here is the banks might be dead near term, but your position here, because they're more attractively valued for an upturn in the second half. That's my investment view. It's probably the bull case at this point.
Right. So on sell-offs, you would suggest buying more, right? And at least averaging down a bit. You know, buy some more at a lower price, right, Ken?
I do, because I think technically, you know, they are moving to oversold. And besides the banks, they're dependent, you know, in M&A and other areas on the private equity firms, which are down more. So it could be a slingshot opportunity, providing there's some signal outside of financials, you know, maybe tariffs or policy, that gets the market excited. So I wouldn't sell out of this group. These banks are best in class, and they're going to be the ones that win as we look to the end of the year.
Okay. And you're talking about rate cuts, maybe 2 rate cuts. There are some people out there saying 4 or 5 rate cuts. People are getting very euphoric, maybe. I don't know. Bob, what do you say about that?
Well, Nicole and Ken, I'm on the other end of the spectrum. I'm thinking more along the line of 0, maybe 1 rate cut by the end of the year, even though I realize that in the last projections that the Fed gave out in March indicated that they were leaning towards 2 rate cuts. And the reason why I'm posturing over there, Nicole, is because, inflation is extremely sticky right now. And Chair Powell talked a couple weeks ago about how inflation is going to rise and stay with us while this transitory, he used that transitory word again, tariff implementation happens over the coming months. Now, we really don't know how long that's going to take. And I think one of the things that the Fed is troubled by right now is the fact that these tariffs could be removed with a tweet. And, what if they do? What if they act upon the words of President Trump or somebody else saying that, oh, we better cut rates or else, and they go ahead and cut rates, and then they do that and they cause a more exacerbated situation with inflation. They bring even inflation raging even higher. So it really is a difficult situation for the Fed to be in right now. And I think by and large, most of the members of the Fed that I've been listening to are going to take a much more cautionary and conservative stance when it comes to cutting rates. In other words, I got to see 4 or 5 months in a row of lower inflation towards our 2% target before we even think about cutting interest rates.
Okay, and I'll give you the last word here, Ken. I know you have a bullish case pretty much that you're setting up for. At the same time, we heard from Jamie Dimon some uncertainty about what's going on with the tariffs. Larry Fink, he was talking about CEOs and their feelings that many felt that we were in a recession already. But you're looking to the second half of the year. Final quick thought. We have 10 seconds left, Ken.
Sure. I think everything works in the second half unless we go to the old term of stagflation, which is the bear case. So that's really what you want to be concerned about. If we don't have that, these are great core holdings in the portfolio.
Wonderful to see you both, Kenneth Leon and Bob Lang. A good preview, thank you, of those financials. Well, the Dow is managing to hold on to the green. We did see the major averages up about 4% today, but for the most part, we've lost some of that momentum, right? The S&P, the NASDAQ down.